Hello, everybody, and welcome to the 48th edition of LM Weekly Wrap, our weekly program to cover the developments relating to the markets. First of all, I think we start off with the global markets. I think it's been quite a quiet session as far as global markets were concerned, but no shortage of action as far as the domestic markets were concerned. We saw some very good momentum at the beginning of the week from various sectors like auto, FMCG, cement, etc. And towards the end of the week, we did see some correction in the markets, but overall, I think the appetite continues to be very, very strong. And another notable feature during this week has been the strong performance of the railway counters as well as the defense stocks. We'll discuss all these things in detail, but prior to that, I think we will get the weekly wrap up on the macro developments, both domestic as well as international, from Jash. So, Jash, welcome to the show and kindly take us ahead.
Thank you, sir. It's great to be back. We'll be starting with the Nifty levels. Nifty closed on to 18,800 as we had mentioned in the previous week's market wrap, and it has been correcting since then. Not a lot of points, but maybe 200-300 points correction guessing. I think it's the profit booking because Nifty had closed into the all-time high. That said, the side counters, mid cap and small cap, have been outperforming. There have been sectoral rotations, auto, FMCG, as Sir rightly said. This is it, and I'm going to give a more macro view on what's going on right now. The foreign markets, we have seen two countries increasing their rates in the last 1 week, but whereas the Indian RBI have maintained a status quo because our economy is much better placed. Our exports is doing very well. That is not the goods but the service exports. We are getting a lot of non-IT outsourcing. The big four have already mentioned that they're going to double their strength as we are getting a lot of auditing and accounting contracts. So I think on the contrary, the dollar bills, that is the oil bills, that have reduced. That is at $75-80, and that has been stagnated. So our current account deficit eventually will narrow down, which is a very great news. It's been 40 years since we have been having high current account deficits, and that narrowing down is a very good sign. I think we are very well placed in the world, and we will definitely get a good. We'll be seeing the good side of the market. But that said, that the dollar denominated stocks that are there, which comprise almost 35-40% of Nifty, that might take a hit because, of course, if the rupee depreciation reduces, that is going to take a hit. The IT sector and all of those. Of course, Nirav sir will throw more light on that. Coming to India, in the next week, all eyes are on the FOMC meeting in the US, and after that, the Prime Minister's visit to the United States of America. On that hopes, I think there might be some kind of movement on our defense sector. On this, especially, I would like Nirav sir to throw some light. Thank you.
Thank you, Jash. So that is the global picture as well as the domestic picture. Definitely a picture of strength as far as the domestic economy is concerned. This week we had the RBI Monetary Policy Committee meeting also, and a heartening thing which is coming out is that from the RBI Monetary Policy Committee meeting, as well as the overall results, the commentary which has been announced by the various companies, is that inflation at last is showing signs of moderation. We are seeing a lot of companies, they have been in a position to optimize their inventory levels. Some companies have been able to optimize their logistic related cost. Overall, there has been a cost optimization drive, and that has resulted in the reordering levels coming at more efficient levels. We are seeing reordering levels, the restoration of the inventory cycle which is happening. If one were to take into account the overall commentary by the companies, there is a confidence, there is a reasonable degree of confidence that the margins are also going to come back. The revenues are definitely going to make a comeback. The margins are going to make a comeback. It may take a couple of quarters still for the things to stabilize. but at least there is some clarity as far as raw material costs are concerned. Raw material costs have been moderating. To just sum up, companies have been saying that there are three buckets which are very, very important. The first bucket is the relating to the raw material cost. The second bucket is relating to the energy related cost, that is the power and the fuel cost. And the third bucket is relating to the supply chain cost, the supply chain infrastructure. So as far as the first bucket is concerned, as far as raw material is concerned, we've seen a good amount of moderation in the raw material prices. That is a positive thing for the companies. Second is energy related cost. Most of the power and fuel costs still continue to be on the elevated side, and that continues to be a cause of concern for the companies. The third is supply chain related cost, and most of this, I think, logistic cost, or whether it's the freight cost, that has come down substantially. So a lot of headache is over as far as the companies are concerned. Another positive side for the companies is that the demand is making a comeback. We are seeing green shoots of recovery in the economy, and that, I think, has augured well for the economy. Now, whatever we have been saying over here, if we sum up all these things, I think, and correlate them to the different sectors, I think the star of this week was the auto sector. And we saw amongst the biggest gainers in this week, we had Tata Motors, because there was the investor day which Tata Motors had organized. So that was also positive. All the commentary which has come out from the company has been positive. Analysts are upbeat about the prospects of the company, whether it is the domestic performance or whether it is Jaguar Land Rover. The second is Mahindra and Mahindra. Mahindra and Mahindra continues to show its strength, its resilience. So I think that is also doing well, whether all the SUV space is concerned, or the farm equipment is concerned, or the tractors are concerned, etc. It continues to do very well. Maruti has also shown a lot of strength, and in a surprise move, I think all the three two-wheeler stocks have also hit 52-week highs, whether it is Hero MotoCorp, Bajaj Auto, TVS Motors. I think the attribute, what can be attributed to the rise in the two-wheeler stocks, is the fact that there has been a marriage season purchase on account of the marriage season, as well as certain purchases being preponed on account of the FAME subsidies which come to an end in June. So this has all boosted the two-wheeler sales in the economy, and I think two-wheeler sales have also done very well in this week. Having said that, I think apart from the auto sector, we've seen some very good momentum in the FMCG space. So in the FMCG space, those companies which are focused more on the premiumization side of the market, like Britannia Industries, Nestle, they continue to do very well. So this week was a week where we saw some very good momentum in these stocks. And HUL, I think, was slightly subdued in trade as compared to its peers in the FMCG space. In cement, we have seen strong moves coming in the cement sector also. We've seen Ultratech Cement do well, Shree Cement, Dalmia Bharat. I think Dalmia Bharat, they have released their annual report also during the week. They have said that they continue to be the lowest cost producers in the country. They are catering to the eastern part of the country, and they are very upbeat about the prospects. They've given very strong guidance as far as the capacity expansion goes. So Dalmia Bharat doing very well, Birla Corp doing quite well. And the smaller the smaller cement stocks have also been doing quite well in the market. So we've seen Star Cement, which has got exposure to the northeast market. It has also been doing quite well recently. And I think overall cement is showing good amount of strength. It's trying to make a comeback. But towards the end of the week, we saw some south-based players announce a cut in the prices. So on account of this, I think the rally in the cement counters did come to an abrupt halt. So that is something we need to be slightly cautious about. Coming to the other sector, I think the laggard of this week would be definitely the IT sector. I think the IT sector has been grappling with a lot of issues. While mid-cap IT stocks continue to perform well, I think it's been the the large cap stocks which have been under a lot of pressure, whether it is Tech Mahindra, Infosys, TCS, these were the biggest losers of this week, in fact. So most of them have traded in the negative territory during this week. So I think the IT continues to be a source of worry for the markets. As far as banking is concerned, we've seen Axis Bank, IndusInd Bank show a lot of resilience. We had the Kotak Mahindra bulk deal today, which took place. On account of that, there's slight pressure over there. But overall, I think banking is also showing a good deal of resilience, taking into account the strength of the economy. Now, last week we had spoken about a few sectors: hotels, textiles, railways, etc. The railway story continues to be very, very strong. Today, amongst the biggest gainers were HBL Power Systems, Titagar Wagons going above 400 levels. Ramkrishna Forge also is showing a lot of strength. So I think these railway focused stocks have been showing a lot of strength. And defense is showing a lot of strength, especially in light of the Prime Minister's impending visit to the US. We've seen Bharat Electronics Limited showing very good movement in trade, and HAL, of course, Hindustan Aeronautics Limited. Getting into defense space is defense or railways for that matter. Is a very, very tedious task. It's not an easy process because first of all there has to be an initial concept, there has to be a proof of concept, then there has to be a prototype which has to be built, the prototype has to be approved, then there are multiple certifications, and then you get into the business, you get the approvals, and after that you get into the commercial side of the business. So there are huge amount of entry barriers over there. So I think the valuation reset is definitely going to happen as far as the defense sector stocks are concerned and railways are concerned. And just to sum up, finally, a few sectors we are looking quite good. Graphite electrode makers, Graphite India Limited, HEG looking quite good in trade. And hotel sectors, of course, continuing to do quite well in trade. Auto ancillary stocks are looking good in trade, and hosiery sector stocks like Dollar Industries, Lux, Rupa, etc. are making a comeback. A lot of many things to discuss, but time constraints will not permit us any further, so I'll hand over to Jash for the concluding remarks.
Thank you, sir. It was a very insightful session, and please like, share, subscribe, and look at our research calls on the InvestMart app. Thank you.
Thank you.